While most Americans are arguing about income tax brackets, the ultra-wealthy are playing a completely different game. They don't care about income. They care about legacy. In 2026, the rules for moving wealth just became the most favorable they've been in a generation. We're talking about a system where you can die with $1 billion and owe the IRS exactly zero. Today, I'm breaking down the three-tier trust system that makes the 40% death tax a voluntary contribution. If you want the blueprint the 0.1% uses to stay at the top, hit subscribe right now. Let's get into the vault. First, the 2026 baseline. Thanks to the current inflation adjustments, a married couple can now shield $30 million from federal estate taxes. That is your free pass. But for the elite, $30 million is just the operating budget. The real challenge is, how do you move $100 million or $1 billion without triggering that 40% hit? You don't give the money away. You sell it to yourself using a defective trust. Coming up in 30 seconds, I'll show you why a defect in a legal document is actually the greatest wealth-building tool ever invented. This is the IDGT, the Intentionally Defective Grantor Trust. Here's the magic. You sell your business or real estate to this trust. Because it's defective, the IRS says you still pay the income tax on the growth. Now, why is that good? Because every time you pay the trust's tax bill out of your own pocket, you are effectively making a massive tax-free gift to your heirs. You're shrinking your taxable estate while the trust's wealth compounds at 100% velocity. It's like a Roth IRA on steroids with no contribution limits. But what if you're worried about giving away too much? You use the SLAT, the Spousal Lifetime Access Trust. You fund the trust for your spouse, locking in your $15 million exemption today. The money is legally gone from your estate, but you still have a backdoor. Your spouse can take distributions for your joint lifestyle. It's the ultimate hedge, tax protection with zero buyer's remorse. But what about the forever wealth? I'm about to show you how a single trust can pay for your great-great-grandchildren's lives without ever being taxed again. Enter the Dynasty Trust. Most people's wealth gets tax-shredded every 30 years when a generation passes. A Dynasty Trust, built in states like South Dakota, bypasses this. You use your generation-skipping exemption once, and that money stays in a tax-free bubble for up to 1,000 years. It can buy homes, pay for education, and fund businesses for 10 generations, and the IRS never gets to touch it again. It's how you turn a family name into an institution. The final layer? Valuation discounts. Before any of these assets enter the trust, the wealthy apply minority discounts. They argue that a 10% stake in a family company is worth 30% less because it's hard to sell. They are literally shrinking a $10 million asset into a $7 million asset on paper, then moving it into the trust. They're moving more value than the law technically allows, and it's completely legal. These aren't just loopholes. They are the architectural foundations of the world's biggest fortunes. Most people lose 40% of their life's work because they didn't know these three trusts existed. We're here to make sure you're not one of them. If you found this breakdown satisfying, hit that subscribe button. It lets YouTube know this content matters. Comment legacy below if you're starting your planning this year. See you in the next one.